So look, Securitize chose RedStone for a reason. MegaETH chose RedStone for a reason. Camino, Drift, Morpho, all of them chose RedStone for a reason to enable those RWA loopings. And our goal is to become the de facto default choice as an oracle for all new team members building innovation and pushing the frontier further.
Welcome to the Edge Podcast. I'm DeFi Dad here with Nomadic. Today's show features the co-founders of RedStone. So we just got off the podcast. I think the conversation is really a dialogue about the opportunity for RWAs, stablecoins, and institutional adoption to grow dramatically over the coming years. At some point, I believe it was Jakub mentioned that they see a 1000x opportunity when it comes to RWAs and stablecoins. And if you think about just how much larger that is, I think it frames up that wherever we sit today in terms of stablecoin and RWA adoption, it's very similar to the DeFi adoption we might have seen in a 2020. That's how early we are. Imagine 5 years later, how insane all of this growth is going to look.
So we kind of crystallize all of this with an example and we walk through it. It's another example of just the composability of DeFi finally coming together, where there's 5 different partners working together behind the scenes to bring a new product to the market. So we walk through this example of Apollo and their Acrid fund, utilizing Securitize for tokenization, utilizing RedStone oracles, as well as Morpho, Camino, and Drift, all under the hood, kind of working symbiotically to allow for the first ever looping of a tokenized fund product. So we kind of break that down, how that works. And I thought that was really interesting. And actually, when I saw that announcement a few months ago, it seemed like a pretty landmark kind of moment for DeFi and crypto.
You have to be able to put yourself in the shoes of those in TradFi who are looking at these opportunities within DeFi. They're not marveling at the protocol design. They're not looking at this as these are all net new primitives. We have nothing like this in traditional finance. They're looking at the gains from the capital efficiency. They're saving time. They're saving a lot of overhead. They're saving themselves from having to hire so many folks that are required to make similar opportunities available to investors in TradFi. And so what's key to sort of straddling the opportunities in TradFi and DeFi is you need a reliable oracle, and that in this case is RedStone. And so RedStone has a really interesting perspective working with folks like Securitize. And so we're just excited to shine a light on all that they're seeing in the markets right now. So just a quick reminder before we get started, subscribe at the-edge.xyz. That's where you can get notifications for new podcasts. We would also ask that you subscribe on Spotify or Apple or YouTube. We're really pushing to grow our following on Apple and Spotify. So if you can write a review or share a link with a friend, we'd hugely appreciate it. And then lastly, a huge shout out to all of our partners on the Edge podcast and the Edge newsletter. They make it possible for us to make this content available to you for free. So if you go to the show notes, you'll find links to all of the partners that we are very proud to work with there. Be sure to show them some love, and we hope you enjoy the podcast. The crypto UX is broken. In AI, you can't trust it. Let Magic Newton set you free. It puts financial freedom on autopilot. It does all the work for you 24/7, so you can go do what you want. This is the vision behind Magic Labs, the creators of embedded wallets. Used and backed by the best, see for yourself with a simpler crypto UX powered by verifiable AI agents. Get started at newton.xyz. Maple Finance is one of my favorite products in DeFi. It is a gateway to sustainable real yield powered by over 1 billion in AUM across USDC and BTC products. And now with Syrup USDC by Maple, anyone can earn institutional grade yield. Learn more at syrup.fi, and thanks to Maple for supporting us here at the Edge Podcast and Edge newsletter. Spark, one of the leading DeFi protocols, has had a year like no other, deploying $2 billion into RWAs with BlackRock's Biddle and other institutional giants, adding over $1 billion in TVL, and distributing over $9 billion across the DeFi ecosystem. Now, Spark are setting their sights on further global expansion and have introduced the Spark token, which is available on leading centralized exchanges. There's never been a better time to discover Spark, the on-chain capital allocator. Learn more at spark.fi. All right, let's introduce the co-founders of RedStone, Jakub and Marcin. Welcome to the Edge podcast. How are you doing?
Pleasure to chat about RedStone after a couple of months. So great to be here again.
Yeah, so good to have you both back. We have previously had you on to talk about really like the origin of RedStone, but there's been a lot of developments since then, one of those being that the protocol token has gone live. So we're going to do our best today to try to connect all of that progress back to the actual token. For anyone who's newer to oracles, can you guys give us just maybe an example here? Like, are we talking about leverage and the leverage is reliant on that price feed, or why are stable coins like also reliant on price feeds, even though they're all supposed to be backed by $1, pegged to $1, pegged to €1, or pegged to gold? What are some examples you can give us?
I would say that Oracle is probably not the most interesting element of crypto space if you compare to the meme coins, NFTs, all of these super interesting, colorful areas. And basically you learn about oracles when something wrong happens, when someone gets hurt, when there's incident. Like, for example, there was an issue with the price of DUSD. So basically something that was supposed to be 1, because it's a DUSD, it should reflect the value of $1. But due to some methodological issues of Chainlink was providing the price, suddenly $500,000 were liquidated on Euler. So it's a moment when you realize how important is the accurate and correct pricing when there is like this amount of value suddenly disappears.
Actually, if I can, because for those who have the privilege of looking on the screen, I would like to give a bit more visual example. So if I can, I will right now. Okay, so here on the screen, for those who are listening, I'm presenting the Chainlink price feed for DEUSD from Elixir, which technically is supposed to be worth $1 because it's a stable coin. But as Jakub was explaining on Avalanche recently, that happened at the end of May. So this post is from May 29th, 2025. We saw that for a very brief moment, Chainlink did report on chain a value that is close to 1.03. So, almost 3 cents above the $1 mark for the stablecoin. And it turned out that many people were taking like highly leveraged positions. And this single update that was so far away from the regular $1 was enough to liquidate those positions, right? And many times liquidations can also cause a cascade. So, one liquidation has caused the other and the other and the other. And as Jakub mentioned, the result of that was $500,000 being liquidated in total on Euler. And because Chainlink did take a volume-weighted average price instead of a liquidity-weighted average price, that has happened. Like other oracles, like an example, RedStone, did not see that kind of an issue at that given time. So just to give a listener a tangible example why oracles are so crucial. So it doesn't matter that throughout 364 days over the year, you're going to deliver one, because there can be just a little 1 second that you deliver something that is outside and that is incorrect to cause people like lose money and get liquidated.
I've been curious, like you guys always seem to be out in front of narratives, and I don't know if that's like seeing where the puck is going, if that's in part due to, a lot of these early protocols that are building something new and innovative have to reach out to you because, of course, everybody needs Oracle. So maybe by virtue, you kind of see a lot of stuff before it's launched. I don't know what it is behind the scenes, but you guys have been pretty early to the LRT space, the RWA movement. I just want to ask you both kind of like a broad question. Like what area of DeFi are you getting really excited about right now that maybe isn't as big as it will be soon or in the future, if that makes sense?
Sure, happy to add my 2 cents. So we got this mantra like buy builders for builders, and when you're close to builders, it's like high chance that you can hear earlier than the actual consumers what's being cooked behind the scenes. And right now what's interesting, you already mentioned the RWAs, but I think it's just the beginning of the wave. Because so far institutions were like trying to enter the blockchain space, but using the approach that was very, very traditional. So there was like ARC when they basically whitelisted the users, gatekeep it from the broader community, gatekeep it from the true DeFi and composability. But right now we are seeing the attempts to actually connect the real world assets to this DeFi magic. So for example, recently we started providing price for a sacred token, which is a very interesting construct. So let's start from the beginning. Like Acred is a security. It's like a tokenized private debt. So it's a very traditional, very stable asset that brings yields around 10% from the private credit. And it gives like a real tangible revenue for holders of the assets. But if you can imagine, you can take this type of asset and then wrap it in a DeFi vault in the form of shares. That's why the name of Acred. Then you can enable the security, which previously was limited to be used only by institutions or sophisticated investors. But the shares that are derivatives of this asset right now can be touched by us, by Myrtles, by all of the DJs, and the S tokens can be used within the DeFi. So the beauty of looping through, for example, Morpho or Euler and multiplying the yield now can be used by the holders of the real generating assets. So, for example, instead of having like 10% of a yield, you can magically get close to 20% if you loop it and use the liquidity that is widely available in DeFi, and you can borrow stables for 5% and then do the acceleration. So right now, both the institutions and the investors can not only enter blockchain as a, let's say, cool innovation to trade, but also use this magic of actually boosting their interest rate revenue, which makes the incentives of coming on-chain even larger.
Yeah, so I actually thought this was a pretty massive announcement when I saw it, because to me it signified institutions not just kind of using the blockchain as maybe like an accounting ledger, but tapping into the power of DeFi with their products more intentionally. So, and just like a highlight, so that what you're describing, Jakub, is this basically a collaboration between Securitize, which is working really closely with BlackRock, Apollo, which is I think behind Acred, RedStone's in the mix, and it's all kind of taking place on Morpho, which I think we'll kind of get into the importance of Morpho and this kind of new modular lending market in a bit later.
I even want to take the chance to go a bit deeper into the discussion you were talking around the real world assets and what's the potential of that market. This is an article that I'm showing right now from the RedStone blog about Acred that Jakub was talking about. It's from beginning of June. And here we break down what private credit is for those that don't know that particular sector. But Apollo is a giant that right now holds $750 billion. So even that number is outdated already, because I checked and 750 billion is what they reported last time. That was the information. And they have a traditional diversified credit fund, which is a regular TradFi product, nothing to do with crypto. It's a regular fund where you can go to Apollo, you can deposit your regular dollars, not stable coins, and you can earn yield on that. And historically, it's been anything between, let's call it 5 to 11% yearly. And now Securitize came into the equation, and they created the Apollo Diversified Credit Securitize Fund, which is called ACRED, which is nothing else than this tokenized fund that Apollo created before. So you have already a product that is working in regular world, and you just tokenize that to allow broader accessibility for the tokenized version. And to give you a very tangible example for myself, if I'm a Pole, so I live in Poland, and for me to get exposure to this diversified credit fund by Apollo, I would probably have to, set up an American bank account and, do some traditional world paperwork. Going through ACRED can be fully digitalized experience. I just have to register on Securitize and be an accredited investor, which still is not, let's say, mainstream DeFi. Not everyone is accredited investor, but you have to take baby steps. So you need to make it step by step more accessible for the broader public. And the end goal is going to be making it truly accessible for anyone in the world. Like, this is the absolute North Star that we are striving for. And what is happening over here, this ACRED is a security, as Jakub mentioned. Now, with ACRED, so this vault, you create a token that is able to be used in DeFi for collateral and for those leverage positions. And now I believe I'm going to talk about the juice on, again, an example that is very much visual. So for anyone willing to get that picture, go to our blog for ACRED. So a regular user would get ACRED via Securitize with your dollars. Let's call it, for simplistic words, you have $1 million and you put it into ACRED. You deposit to Securitize. That is being transferred to ACRED Vault, so that you make from ACRED ACRED, which is this token that is possible to be used across DeFi and liquidated. And this ACRED is put as collateral, in example, on Drift or Morpho or Camino. All of these platforms allow for that strategy right now. So you've got $1 million of ACRED deposited to Drift. And what's happening right now is you can borrow USDC against that collateral. For simplicity, let's call it that you have a 70% liquidation threshold. So you would borrow only 50% of what you put as collateral, so that you don't hit this liquidation threshold easily. So if you borrow 50%, that would give you 500,000 USDC. And with this 500,000 USDC, you can go again to Securitize, deposit that into ACRED, go again to ACRED, and loop again, right? In that regard, you create a RW, the first ever in history, and I want to emphasize that RedStone allows for that, and RedStone enables that. It's the first time in the history where you have a tokenized private credit fund being able to be leveraged in DeFi with this infrastructure. And this is a huge breakthrough, because it's just the top of the iceberg as we go into the broader adoption. So in this particular case, you accept the counterparty risk of Securitize and Drift naturally, because you're utilizing these parties. You also accept the potential risk of ACRED, depreciating in value, because what ACRED is private credit. So people are borrowing, lending money to each other, and there are risks of defaults of single particular, like borrow lends. So the value of ACRED is not only appreciated, it can depreciate at a specific moment. But you essentially increase your exposure to that product, and from, let's call it 5-11%, you can create a strategy that gives you on your stables between 11 to 16, maybe even 17%, right? Not going into any other product out there.
I wanted to kind of key in on one aspect here. So a while back, I saw this pretty big announcement. Securitize has been one of the big players early into this RWA movement. And I kind of just think of them simply as this kind of connective tissue between TradFi and blockchain, and kind of helping people enter the space. But they picked RedStone to be their Oracle provider. I was curious. I never really got a chance to ask you guys, like, what went into that? What happened behind the scenes? And, what's the insight that you have of why RedStone was chosen to work so closely with Securitize?
Yeah, talking about Securitize specifically, that was a process that took us a couple of months. And as Innovatic well pointed out, Securitize is responsible for tokenizing the asset. So you have an asset that is living in traditional finance, let's call it a T-bill or like a private credit fund. And what Securitize is doing is creating a token representation on chain of that asset. An example on Solana, on Ethereum, Polygon, or any other blockchain out there. But this tokenization is not bringing the information about the price or the yield accrual of the asset that is living in the traditional world. And here is where Oracle comes into the place to deliver constantly and accurately that price alongside the tokenized asset. To give you a simple example, imagine we tokenize real estate, and the value of this real estate today and in a month and in a year is going to be way different, right? And so the price of that real estate would be delivered by an Oracle. So we started talking with Securitize, I believe in Q2 2024. I don't really remember exactly when we started talking because that was like a pretty long process, because they were also like trying to figure out how to introduce those tokenized assets into DeFi, because as Jakub pointed out very well, those are securities. So you have to find the framework, and this S token Vault was the solution that they came up with, and kudos to them. I'm still very impressed like how they very elegantly approached that topic. When they were assessing oracles, they were looking at reliability as the number one metric. And from the top players on the market right now, RedStone is the only one that has never ever had a mispricing event, any price manipulation or downtime. Even the biggest player, Chainlink, did have smaller hiccups. Naturally, they are securing a breadth and depth of DeFi, but they did have some smaller events that people could deem less like a failure. In example, when it comes to methodology, should it be volume weighted or liquidity weighted and so on, Jakub can dive into that in a moment. But specifically on the vertical of being robust, RedStone has been very, very solid partner. Second vertical that they looked at was being scalable and being able to support the wide spectrum of blockchain they want to deploy to, right? Because they launched on Avalanche, Solana, Ethereum, Inc, Aptos, I believe Sui, many other blockchains out there. Those are different virtual machines, different environments, different DeFi protocols. So they wanted to have a partner that is agile enough to go where they want to expand to. And last but not least aspect was also, I would say, capability to work on the both worlds, the TradFi, where you should be fairly serious, you should be, like a reliable partner, and DeFi, where you should be looking at the innovation and being able to speak the language of sometimes the degens, sometimes the people that are taking like pretty interesting strategies and so on. And what was the result of that is they decided that RedStone is a good partner. And ever since we've been supporting their expansion on, as mentioned, Ethereum, Solana. We launched on Solana in May, so fairly recently with SACRED, and we'll keep growing in that direction.
So RWAs has been one sector of DeFi that we have really leaned into. A part of that is because if you define stablecoins as RWAs, which I wholly believe they are, then RWAs are the biggest sector of DeFi right now. I'm wondering, how much bigger do you think RWAs get? How much bigger, do stablecoins get? How big of an opportunity do you believe this is?
I think we are still super early. Like, we've just saw the first interaction between the RWA asset and DeFi last month with S assets. So basically, it's like I would say, just the beginning of the flow, the real capital, And if you look at the value of the real economy, if you look at the value of all of the assets, equity of the traditional finance, that totally dwarfs the total value locked in DeFi. So we are talking about trillions, quadrillions, if we sum up all of the TradFi assets compared to mere 100 billion. So we are talking about 1,000x multiplication. And that's why we are very excited to be on the front of this movement and help with the expansion.
MANTLE is charting a course towards a future of enabling crypto access for everyone, with major endeavors to build MANTLE Banking and MANTLE Index 4. MANTLE Banking means a new crypto neobank that helps users spend, save, and invest across their fiat and crypto finances, all in one account. MANTLE Index 4 is a tokenized fund in partnership with one of the leading tokenization platforms in the market. You can think of MI4 as the S&P 500 of crypto. To learn more, check out group.mantle.xyz, and thanks to the MANTLE community for supporting us here at the Edge Podcast and Edge Newsletter.
I want to dive into another layer of this operation as well. So I think we've kind of gone through how each component works here. There's a layer with like, that Morpho is in, that Euler is in, this kind of like new modular money market. And there's been this rise of these vault curators or risk curators, whatever you want to call them. And I'm seeing kind of DeFi come to rely on these players a lot more. And I think it introduces new risks to the average DeFi user. And I think there's probably some extra vetting that you need to start taking into account when you come and see one of these new vaults. And okay, it's got a risk curator, but like, what are they actually doing? And I'm kind of curious where RedStone fits in with this relationship that, I think this is a trend that's not going away. It's only going to gain steam. I think there's clearly an appetite for this kind of arrangement. So yeah, how is RedStone fitting into these new modular money markets like a Morpho, like an Euler? What's kind of like your role that you play there?
Yeah, so it's funny that in like a modular markets, because one of our mantra and the motto is like being a modular oracle. So there's like a natural fit. That's why we are like, say, kind of a big fans of this movement. But don't get me wrong, like we are talking about it as an old model, but Aave basically like gets around, 5 years, and we still see it like a traditional lending model when the decisions are being made by DAO. It's like a pretty democratic process. It's like a backbone of the blockchain ethos, but also like with all of the DAO, it's like pretty slow. So any decision like adding a new asset, opening a new market, changing the risk parameters, it takes a lot of time. They need to get it through voting. They need to get like opinions of the experts, advisors, etc. On the contrary, DeFi is a pretty dynamic market. As you may notice, like there's a new type of assets, new model, new mechanism, new opportunity to get yield. And there was ideas like how can we make it more dynamic? And Morpho got a brilliant idea to actually introduce new players in the space in the form of curators. So basically, instead of a single DAO, which is the perfect mechanism, but really slow, you got the professionals that can act much quicker because they manage like a smaller amount of funds. They are pretty independent, but also there is a competition between curators. So there is like a natural force to try to create a strategy, try to create a composition of markets that give you a higher yield. And for that, you often need to be more risk-taking or courageous. You use different set of assets that are new to DeFi because usually the new asset generate a higher yield. There's some alpha. There is like a chance that early adopters can skim the cream from the assets. And for that, you need an oracle that can move fast. So for RedStone, it's this amazing opportunity to pair with the risk curators and quickly deliver them what they need. But also what is important, these curators tends to promote the strategies that generate the highest yield. So often looping, as Marcin was describing, so the fact that you deposit asset, take a loan in stables, buy more of an asset, deposit, take a loan, repeat. So we get more of a yield, but also you are exposed to a higher risk. So not only you need an oracle that is flexible for new assets, but also an oracle that is very accurate, that is quick, fast, and can help you to protect the capital. And basically also it ties a bit to a new product that we are working on, which is the RedStone Atom, form of an oracle extractable value, which is a solution that helps to actually protect you against liquidation.
I have a quick follow-up here. In terms of the risk curators that are so important to the likes of Morpho or Euler or another protocol would be Term Finance, I'm wondering, are you having to come to the table every time they launch a new vault, or do you basically build a relationship and obviously folks that you're already working with and providing support for those vaults, having proved yourself? Is it about just signing up then for the next opportunity? I've always wondered, without sharing, I guess, the secret sauce behind closed doors, what are those conversations like?
Yes, so we are in crypto. Everything happens on Telegram. So that's the funny part, that all of this configuration is being negotiated. What's helpful is that apart from building infrastructure, we try to in-house develop some skills in data analytics, in understanding the asset, the risk profile, etc. So when we are talking to the risk curators, we can say, the liquidity is not deep enough, this asset could be risky, or we can suggest that we can revisit that if there are more liquidity is deployed across multiple pools, etc. So it's a conversation basis, and basically together we're trying to see what feels to be safe enough to give it a try on the market, and how best can we provide the price. So it's pretty informal. It's a very interesting process. It's very dynamic. We are basically chatting with each other every day.
Jakub, you're talking about something earlier. I think you called it Atom. What more can you tell us about that? Does that have something to do with? I think you said it had something to do with MEV and kind of capturing that and shielding people from MEV. Is that correct? Maybe, yeah. I should let you describe it, not me.
Absolutely. So we're talking about the beauty of the new lendings, which offers you really easy access to looping, but also with the leverage exposure to the risk of price falling down, there might be a liquidation. So we were thinking how can we better utilize the premium from liquidation, and how can we actually redirect the value from liquidation, which used to be captured by MEV bots, back to the protocols or the users. So maybe a bit more about the liquidation mechanism. Let's imagine that you heavily looped an asset. It's going to be a sacred asset, but suddenly someone didn't repay a loan for a big factory in US and the price dropped a few dollars. And as soon as RedStone reports that price on chain, there is a possibility to liquidate a position. And in order to incentivize the liquidators, there is a premium, a profit to be made by the liquidator. So obviously, you want to make that transaction of liquidating a position. But you're not the only one. It's a profitable business. There are a lot of professionals trying to liquidate positions. So the first one, the faster, will get the premium. So bots and liquidators are competing to actually be the first one after Oracle update, to backrun the update, and to be able to take the profit. And to be just after a transaction, you need to basically bribe the block bidders, and it happens through the miner's extractable value when you can bid for a certain ordering of transactions. And with RedStone, we're trying to redirect this stream of capital from block builders, MEV operators, all of that infrastructure, back to the protocols and the actual users of a protocol. So we created a solution when you are not bidding for an access to a block, but you are directly bidding for a priority access to a price. And then we can take the profits of this auction and redistribute that either to the protocols or to the affected parties. So it's a change of mechanics. We are trying to bring the funds back to the originating depositors.
Guys, I want to switch gears here and talk more about value accrual for RedStone. So we're talking about all the growth opportunities, all the traction, all the success that you're having. How do we translate that into the RedStone token?
Very good question. So for those who have not realized, RedStone launched the Red token on 6th of March 2025. Right now it's available on majority of the biggest exchanges globally, like, Binance, Upbit, Coinbase, Kraken, Bybit, and so on. So we have a global presence in that regard. When it comes to the tokenomics and the utility of the coin, you can stake RED on the eigenlayer AVS that RedStone created to secure the flow of the data feed. For anyone willing to learn the depth of the integration, you can go to RedStone blog and read about the staking module and the available yield over there. What is really interesting is when you're staking RED right now via either directly eigenlayer AVS or EigenPi, where you would get MRED, which is, this representation of staked RED. In both of the cases, you are earning rewards not only in RED itself, but also in Eigen tokens. Because Eigenlayer believe in what we are building and wanted to help us bootstrap the actual people staking over RED in the AVS itself. We are working on some additional partners to also contribute to those kind of rewards for anyone participating out there. And talking about the value accrual, we are a team that from day one believes in the sustainable long-term growth and building the fundamentals of the on-chain finance that are just more efficient and essentially in many terms better than the traditional finance world that we know it. If anyone would dive deeper into the history of finance, they would recognize that the financial system in the US was created in absolute separation from, an example, Poland, and then you have Japan, many other nations out there. They have their own, let's say, traditional finance rails, and these systems do not talk to each other. Let's call it that way. There are protocols and solutions such as SWIFT, an example, to send money across countries and continents. But these solutions were not created from the get-go. Whereas blockchain has no boundaries, right? The technology itself is not tied to any specific country and is global by its nature. And in order for that to be as efficient as and even more than traditional finance systems, you need pricing information and data feeds in general. And this is where oracles come in. So the importance of the infrastructure that we are building, I believe, is neglected by many because they just don't realize that majority of the protocols they use day to day, all the names that you mentioned, Camino, Drift, Morpho, Aave, Compound, and so on and so forth, are secured by oracles in the end. And the moment oracles will start to have hiccups, majority of those systems would have truly big problems, or even the users that deposit the funds over there. So as we expand RedStone, we are dedicated to create a healthy and sustainable business, ensuring that the deals that we are doing are also the financial ones. So there is the business model component to that. But at the moment, we, as a startup, as the earlier company, we prioritize growth and expansion over, let's say, like accruing just the cash in the bank account. So we dedicate big resources into R&D. To give you a tangible example, RedStone Bolt is the fastest blockchain oracle in the market right now. It was created in cooperation with MegaETH, and that costed us also quite a couple of months of deep work and research to enable updates every 2.4 milliseconds, which is 400 updates a second. For regular human, it's pretty hard to comprehend how quickly that happens over there. We created RedStone Atom, as Jakub pointed out. We created the AVS, and those systems, it's not like just copy pasting some other RES out there. This is like a clear innovation, and all of those products have the potential for also having like a proper flywheel in the business model. And ultimately, our goal is to streamline part of it towards the token holders and into the broader ecosystem.
Hey folks, I want to tell you about our sponsor GEARBOX, the protocol that reimagines on-chain lending. With GEARBOX, you can access 10x credit across DeFi or lend for passive yields with single asset deposits and no impermanent loss. Users can access leverage to margin trade, stake, farm, and more. To learn more about GEARBOX, go to gearbox.fi. RUMPEL Labs is revolutionizing DeFi. RUMPEL lets you turn points into profits by tokenizing rewards you can trade from top protocols like Pendle, Athena, Fluid, Symbiotic, and many others. No more waiting for airdrops or TGEs. DeFi's smartest investors are already using RUMPEL to unlock instant liquidity and maximize their yields. So join RUMPEL today and start spinning your points into gold. Learn more at rumpel.xyz. Say hello to Puffer UNIFI. Puffer Finance is expanding beyond native liquid restaking with new products such as UNIFI-based ROLLUP and UNIFI pre-confirmations AVS. UNIFI is not just another L2. UNIFI is a based rollup, one that will solve L2 issues, such as slow withdrawals versus instant withdrawals with Puffer UNIFI. Puffer UNIFI is fast, capable of sub-second transactions. UNIFI also has boosted Puffer points, which means if you bridge assets, you earn boosted Puffer points and rewards from dApps on UNIFI. Puffer's core products mean a bright future for Ethereum. Learn more at puffer.fi.
Guys, I think it's pretty obvious we're heading into a future with probably thousands of chains, app chains, L1s, L2s, you name it. How do you support all these different chains, all these different VMs? I guess, like, how does RedStone internally support all these different emergent and branching sectors?
Yeah, so I would say that we are like pretty lazy as developers, as engineers, and we architected the system in a way that we can reuse the majority of we've already built, like the nodes used for data discovery. And we can basically implement just a tiny connector for a new network to start operating there. So that's how we expanded to Solana, Sui, and all of the, let's say, similar SVM networks. That's why we are also on the Telegram network. We are on Starknet. We are on the less popular networks, like, for example, Radix. But also there are like tons of interesting ideas being cooked into the L2 space. For example, Arbitrum Stylus we are pretty excited about the potential. We already mentioned MegaETH, which is also super cool. It totally redefines the design space because you got like a block time around 10 milliseconds. Then there is Monad. Then there are like new chains that are targeting RWAs, like converged, like chains for stablecoins, etc. So a lot of people were thinking, like, why do we need so many chains? But actually, in practice, there are like new chains popping up that are targeting a very specific, narrow business use cases. And yeah, we are very happy that usually we are the first one to enter that chain. And out of the box, we can provide more than 1,000 of price feeds to be consumed there.
Guys, I'm curious if there's any other business lines that RedStone's working on that might not be directly Oracle related, but maybe sort of tangential. Yeah, anything else you can share, kind of maybe what the next year ahead looks like for product releases?
course, looking into the future, we published our high-level roadmap again on the blog to Redstone. So if anyone is interested where we are going to be cooking, feel free to go there. But there is not that much detail. I would say for the next 6 months and probably beyond as well, we want to be a gateway for institutions to create structured products on chain and helping them to understand how to bring other types of tokenized assets into the DeFi ecosystem. As I was telling you, the tokenization, by the way, DeFi that pointed out pretty nicely, started with dollars. So USDT, USDC is nothing else than tokenized dollar. And that's how it all, I'd say, got into the flywheel. Then another breakthrough, in my opinion, was tokenizing T-bills, mainly the American ones, but we also have tokenized European ones and others in the globe. And what I was talking about ACRED is tokenizing private credit. So a product that is already giving you higher yield, but also higher risk in comparison to T-bills, which is considered like one of the lowest risk on the market in general. And this is, again, another step. So what we have ahead, we have insurance products that historically have been also giving a pretty high yield, but also have a bit of a different risk profile and timelines, right? Like how is the redemption would look like and what kind of insurance would be packaged under a specific tokenized product. You can have structured and complicated structures in the tokenized funds. You can have a bit of private credit, a bit of insurance, a bit of T-bill. So starting to do like a basket. And eventually, in my view, we are going to end up with on-chain kind of like hedge funds. So a combination of the traditional finance products, but also the beauty and the powers, the superpowers that blockchain and smart contracts give you, right? So this is the future that we would envision. And this is the future we want to enable as the Oracle, as the partner that delivers not only the price feed, but also other data related to the market. So volume, number of holders, redemption period, yield accrual. So there are many market metrics you can deliver. And then potentially even going beyond the market data. So, maybe GDP is not so much market data anymore, right? Like it's a bit of about the growth of the globe. So you could potentially bet on the GDP of the world or GDP of a specific country, which one is going to grow quicker and whatsoever. Talking about new products specifically, we have ideas how to increase the efficiency of the lending markets. RedStone Atom that Jakub brought to the equation is one of them. But we've got some other ideas that we cannot share yet. By the time the podcast is going to be released, it's not going to be present. But trust me that every week we are researching how to improve the flow either on Ethereum, that is, the biggest liquidity and also very, let's say, mature ecosystem with many players involved, but also on Solana, that is quicker and a bit of a different nature, as well as on the most performant chains like MegaETH that Jakub was talking about. To close up like the new product topic, we are also thinking about maybe consumer-facing product eventually by RedStone. Historically, we've been mainly focused on the B2B side, but we do feel that even a simple consumer-facing product would allow us to give people a better gateway to understand RedStone, because as you both know, Marcin and DeFi that clearly noticed, people don't appreciate the importance of oracles until bananas happen and things go south and people get liquidated and they lose their money and they get emotional. That's the moment they start to look deeper into what was the cause, and for some of those events are actually the oracle failures. So we want to grow the awareness, educate the market, and showcase how fundamental part of the whole ecosystem we're bringing to the table at large.
Yeah, there are parallels between Redstone and Ethereum for me. And the parallel is that you don't appreciate a lot of the benefits of having something that is so reliable and so predictable. Having DeFi or having your on-chain activity essentially be safe, not having to worry about exploits. And so to your point, until something actually breaks, that's when folks really start to appreciate like the track record and reputation that you guys bring to the space. And I think you've always been looking to the long term. Like you mentioned earlier, I think we want to be a gateway for institutions. We've been covering a lot of this on the podcast recently. There are just enormous investors coming on chain. And I think what we talked about with the tokenized ACRED, like that's just a really simple example of something that is going to, potentially bring not only hundreds of billions, but trillions on chain. And then if you just look at stable coins as well, like the opportunity is enormous there. As we're recording this, the Genius Act passed in the United States. So that's going to sort of signal to all the big players that they should get involved with a stable coin. I think JP Morgan announced that they'll be doing a stable coin that is on Base as well. Like the floodgates are really opening. So I don't know why, you wouldn't want to be working in this space. And you guys are one of these primitives that is just so important to that sort of adoption and that growth in the space. But guys, I think this is a great place for us to start to wrap up. So first, I want to remind our listeners they can learn more about RedStone by going to redstone.finance. They should follow RedStone_DeFi on X. Follow Marcin RedStone on X. That's Marcin's personal account. Follow Jakub's at Kuba, KUBA_Redstone. And then, guys, any final word for us before you go? Just thanks so much for coming on. It's really exciting to hear, all of the milestones. Lately, the token has been an enormous milestone. Getting that, live is huge for the protocol and for the growth of the protocol, supercharging the brand that is RedStone and getting the community involved. But clearly there's lots more to build here. So yeah, what else can you tell us before we go?
Yeah, thanks a lot for having us again. I believe the growth we've achieved as RedStone since our last pod tells the story. So look, Securitize chose RedStone for a reason. MegaETH chose RedStone for a reason. Camino, Drift, Morpho, all of them chose RedStone for a reason to enable those RWA loopings. And our goal is to become the de facto default choice as an oracle for all new team members building innovation and pushing the frontier further. So this is where we go. We look where the puck is going and we deliver what people are actually needing on the market. And I really want people to remember and associate RedStone as the brand with the innovators that enable new aspects and new products in the intersection of the traditional finance and DeFi itself.
Thanks everyone for tuning in. To stay up to date with future episodes, plus get expert tips, strategies, and exclusive content, subscribe to our free newsletter at the-edge.xyz.